Good day, folks. We're back in action. Since the return from my vacation, things have been propelling to all-time highs. We're going to review my 270K stock portfolio, my path to financial independence to perhaps one day retire early. If you're on that journey as well, join me by consider hitting that subscribe button and that like button while you're down there, because first and foremost, this market is similar or starting to feel like where we were at in 2020 and 2021, which is just the lack of hype in the micro cap sector, because the S&P all-time highs. I mean, we're up 13% year to date. GameStop is roaring back thanks to the kitty of roaring. And if you didn't watch that live stream, it garnished 600,000 congruent viewers, probably a record for a stock market live stream, yet I think came in very underwhelming. I watched it, a lot of us watched it in the chat group, and we were just not thoroughly like enthralled by the whole video. He almost sounds just like a yammering guy that is literally just YOLOing and gambling. And I think the stock price, kind of took that into consideration as it was dropping during the live stream from where I think it was at. I think it peaked somewhere in the mid 30s and now we're down under 29. I guess we'll have to see what happens with the stock price, but I'm not playing it. I'm just watching it from the sidelines. The Nvidia CEO has been signing breasts. We're in a weird market that could be bubbly, to say the least, when stuff like this starts happening. There's been nothing that exciting about Nvidia except for the stock price going to the friggin' moon with earnings that have led to that. I think the price to earnings multiple is I don't think it's justified here. It's somewhere between 70 and 100 right now, which at a $3 trillion market cap, making it the second largest company now basically in the world, is kind of ludicrous at a 70 times multiple. I don't know how to express, this has to get to a $6 to $10 trillion market cap just to justify the current value you're paying for it. And the earnings, I think this will be the last bit of real insanity, in my opinion. And what I mean by this is I've told you the earnings growth is on a year over year comparable, because when you look at the diluted earnings at $5.98 versus 82 cents this year prior, that's where you see the 600% growth rate. But the law of large numbers is starting to catch up, because on a quarter over quarter basis, we're getting down into the teens with some of this. Revenue growth is down in the teens. You're going to see net income get down into the 20s here, which on a quarter over quarter is still mind boggling, to say the least. But eventually these chickens are going to come to roost. I just through the entire cyclical industries that Nvidia's played through, whether it was crypto mining, gaming, and all this stuff. Again, I think you're going to see this roller coaster eventually come due, and it's going to start dropping. And I've been wrong so much about when that's going to happen, which is why I don't own it. I'm not playing it. I'm just reminding you, there's great money on the upside, but I'm promising you, this isn't just a moonshoot to infinite money glitch. And I think we're getting to the latter half of this story, but these things can last a lot longer than anybody can expect. On top of that, we have the Bank of Canada for the first G7 country to cut interest rates, which I think was well deserved, because we're one of the only countries trading at around a 2.5% to 3% inflation rate. Pretty much for the entirety of the year, we've been under 3%. So it's no surprise that Canada's getting to the point of cutting rates, where they're kind of playing chicken right now with the housing market. I think 3/4 of all mortgages are coming due between 2024 and 2026. So they need to continually cut these, because it's going to be a very interesting cycle for the real estate market, which is why we've seen banks put record amounts of loan loss provisions aside, which isn't money that's lost. It's just money that is a war chest in case there's a huge wave of defaults on these renewals. So this is fascinating, and I think it's going to lead perhaps other countries to want to cut rates. But if it's all data driven, I have a hard time believing the states will cut rates yet, because inflation's still over 3%, even though they should. I think we're at a point where they need to start cutting rates. So rounding this whole conversation off, what does it mean for my portfolio? Well, we're crushing it because we're boring, but we're not crushing it like Roaring Kitty's crushing it, because I don't have that gambling itch like I used to. As I've aged into my 30s here and have built a reasonable size of wealth for my age, I don't like gambling with it like I used to when I used to own individual stocks the MJ stocks like Canopy Growth Corp and MindMed, even though we still have some of these speculations, just nowhere near to the scale they were, because I remember there was a time where I only owned 2 stocks. Now I'm more diversified, and I own a piece of real estate. And I'm just kind of building up into that early retirement before my 40s here. And we're getting there decently, right? Just on my side of the portfolio, we're up $30,000 since reconstituting this in 2022, I believe, during the drop. So, I mean, we we're doing pretty well, over 15,000 a year just in gains, not including dividends, which I need to calculate here. I have not calculated the dividends yet, but I'm very happy. I bought more VDY this week, not necessarily because of the interest rate cuts. If we take a look at the portfolios positioning themselves in my tax-free savings account and my registered retirement savings plan, this is where I'm going to be most active. As I told you, my corporate account, where I've got over $100,000 sitting in the S&P 500, I'm not really correlating that very much because I've been trying to pay money out of the corporation, and any money that I earn there, I've been putting in my RSP. My corporation owed me some money, which is how I've been filling my TFSA up. And I'm in this position now where I just want to keep filling these accounts because I've still got like $170,000. Oh, I had $170,000 worth of room in my TFSA, this account specifically, and I've got about 75,000 contributed now, or about 73 after the gains. So we've got a long ways to go, but another 100,000 that we can add to this account, which is where a lot of my focus is going to be. But we can see I haven't bought VDY in here much as of late. I did buy more Tesla while I was on vacation there. We're up to 63 shares. I made a video about it. So yeah, I'm still adding to the Tesla position. That's going to be my own real like hardcore speculation. But again, I got things like Aduro Cleantech, some of these smaller caps that I've been talking about on the channel. But again, those are more lottery tickets, so they're not sizable. And I usually don't like showing my highly speculative positions because I don't want to pull the roaring kitty and see if I can pump and dump stocks. But other than that, VOO has been crushing it, just showing that probably the best position you could be buying is the S&P 500 for stability. And taking a look at the RSP, which is funny because both these accounts are equal size now. SCHD has been coming back nicely. I mean, I haven't bought more of it. I was thinking about buying O Realty Income as a recovery play, but because we're heading into the interest rate cuts, I'm still very bullish on the Canadian economy. I think TD is trading a bit discounted, and instead of buying TD on an individual basis, it's like 10% of VDY. So I figure, for every bit of money I put in here, I'm getting a really healthy amount in TD and all my other favorite Canadian stocks that I think are still worth buying today. So VDY, I've got about another $6,000 worth of contribution from my RSP. I'll probably be buying a little bit more VDY. We'll see when we get to that point. I'm still debating O Realty just to get the interest cut recovery, but still, playing these fields, VDY, easy income. We'll see what happens when I get another 6K to contribute to this account. So that's where the overall portfolio is sitting in this moment. $10,000, $11,000 cash, $257,000, $8,000. Currently is portfolio value, sitting on not too much cash. Like I said, I don't like having as much cash these days because I feel like the market is in a perpetual bull run. Canadian market still needs to catch up. U.S. market, I think even though tech stocks are very bubbly here, I think as they cut interest rates, it's going to propel the lower half of the market. Who knows? We'll see. Could be wrong, but I'm always buying. Taking a look, the markets have done exceptionally well this week. The big tech companies have been coming back. Apple, congrats to whoever bought the dip. Google, Nvidia here, just incredible amounts of gains. Same with the Canadian side's a bit of a mixed bag. We've seen a lot of lackluster performance in energy this week, basic materials. But again, we're seeing BCE, TELUS, some of the telecoms come back. Shopify's coming back. Banks, because of bank earnings, a bit of a mixed bag still. But lots going on, and we'll keep an eye on GameStop just for entertainment value. But again, I'm getting far conservative these days, but I do like the congressional growth of VOO and SCHD plus that juicy dividend income. But let me know what you think in that comment section below.